All right, so good evening, everyone. Good evening and welcome once again to day 3 of our training. So looking through our schedule, today we're actually looking at risk management, okay? And this risk management, I had risk management, we've looked at it earlier. What happened? Okay, so I wanted you to see it very well. So today, okay, is risk management. So every other thing embedded or risk management is what we'll be looking at. So let's, so we talked about stop loss, all right, proper sizing, leverage control, risk to reward ratio. All of this, we have run through them, okay? Okay, avoid over trading, emotional discipline. We've done all of this one. Then we came to pips calculation. All right. Okay, we came to pips and I said pips is percentage in points. You can also call it price interest point. I made reference to using Naira. Okay, when price moved from 5 Naira to 10 Naira, let's assume that the price has moved 5 pips. Yeah, I made all of those references, so we won't be going through all of that again. Today, we'll be going straight to what we did not touch on that day. So we also talk about the lot size. We did, right? We did we did talk about lot size, right? Yes, I can remember. So lot size, that was when I made reference to going to the river to fetch water. Someone who went with a 4-liter gallon, someone who went with 50 liters, and another who went with a tanker, who is coming with more water, okay? And in the same vein too, if it happens that everybody now having that water, we have to lose it, who will lose more? So that is what the lot size means. So lot size is simply your volume, okay? The volume at which you go into the market, and that is dependent on your account size, okay? That's really dependent on your account size. So someone who is trading with $10,000 and someone who is trading with $100 will not be using the same lot size because the difference is huge. You want to make profit that is commensurate with your account. So the person with a big account would want to use a bigger lot size, while the person with a small account definitely will use the lot size that is commensurate with his or her account. Okay, so stop loss and take profits. So this will be our focus today. Taking it from here, stop loss and take profits. So we'll be taking it from here. In trading, take profit and stop loss are two essential risk tools that help traders lock in gains and limit losses. What it means is that to lock in gain is to set a particular price that when it hits this level, please close me in profit. All right. In the same vein, you have analyzed your trade and you enter a trade, and it happens that the trade did not go in your direction, it's going in the other direction. What the stop loss would do is that the stop loss will stop it with the loss that you have set to say, this is the much I can lose. Please take me out of the market. That is the work of stop loss. So your stop loss actually guides your account. So that's why we talk about proper risk management, okay? Your proper risk management, it starts with your take profits and stop loss. Yes, we have mentioned every other thing that needed to be done. You know, we're going to be listing them, calculating your lot size as against your account size and all of that. But if you don't trade with stop loss, you know, there's this saying in the Forex market that those who stop using stop loss will eventually stop trading. Because if you don't use stop loss, you keep funding your account, all right? You lose, you fund, you lose, you fund. At a time, there will be no money to fund again. So what happens next? You stop trading. But if you are trading with stop loss, you will not lose your account, okay? I believe it's sounding like I have taken this before, because when I make analogy, I do remember. So it's like we've also looked at take profit and stop loss, but it's still okay, no problem. So let's look at TP as number one. Say this is a preset price level where a trader wants to automatically close a trade to secure profit. Once the market price reaches this level, the trade will close and the profit is realized. For example, if you buy stock at $100 and set your TP at $110, your trade will be closed automatically when the price hits $110. So the market, whether you, as long as you have set your take profit and stop loss, if you like, let your phone go off. Whether you have network or you do not have network, this has been preset and it will do what it has to do as long as the price set is reached. Okay, so stop loss. So this is a preset level where a trader wants to automatically exit a trade to prevent further losses. All right, you have looked at the market, done your analysis, and you have set your point, okay, this is the much I can lose. If it happens that this trade did not buy, meanwhile I want to buy and it keeps selling, please take me out of this trade at this level. So if you set, like with the other one now, we use $100 entry. So if you set your trade to be $95 stop loss, when it happens that the trade goes down to 95, it will take you out of the market and keep your balance for you, okay? So once market price hit this level, the trade will close to limit loss. For example, if you buy stock at $100 and set your XL at $95, your trade will close automatically if price drops to $95. So why use stop loss? Why do we use stop loss? Why do we use stop loss? Very, very clear, sir. Okay, nice one. Okay. Why use them? Now, why do you use stop loss? TP helps you to take your profit goal without getting greedy, okay? Now, you can actually leave your trade open and it can continue to run, okay? It can also continue to go in negative. But the truth is that you have set your take profit, number one, based on the data and history available on that particular asset, okay? When we talk about data and history available, we're talking about the charts, all right? The charts actually give us history of events that has passed. It's also give us data to work with. So most times we don't just set TP and stop loss, we set them based on events that has happened in the past. Now, all of this we are saying are theory. You know, from next week, we'll be doing practical. The whole of next week, everything will be practical. So when we come to class like this, we'll be doing all of this practically. If you look at our timetable, that is what it's saying. Practical, 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 that's what we'll be doing, okay? So help protect your capital by limiting losses in case the market moves against you. Common tips. For example, if you enter a buy on Euro USD at 1.100 and the spread is 2 pips, okay? Now, we've talked about spread before. Spread is what the broker take as his commission from the trade you are taking. So the spread is also calculated alongside the pip movement that you'll be moving on the market. So now look at this analogy. If you enter a buy trade on Euro USD at 1.0000 and the spread is 2 pip, your break-even point is 1.002. Now, what does it mean to break even? To break even means that you did not lose, you did not gain. So now that the spread of this asset is 2 pip, for you to make profit, you must do more than 2 pips. Okay? So let's assume this trade now move from 1.000 to 1.150. So what you'll be making will be 48 pips. 2 pips is out for the broker as commission, which is the spread, while you take 48 pips as your take profit. Okay, so that's because you must recover the cost of the spread before making actual profit. All right, trailing stop. Now, there's what we call trailing stop. Now, trailing stop is actually set automatically the same way you set your take profit and your stop loss. But on MT5, you can only set trailing stop on your laptop, on the desktop MT5. Okay, the same way we have MT5 mobile app, which is the one you've downloaded on your phone. We also have the desktop version. We'll show you all of that and how to download it and how to set it up on your laptop. You will have all of it. Okay. So for MT5, you cannot set it on your phone, but you can set it on the laptop. But there is a way we also do trailing stop manually. So what is trailing stop? Trailing stop is actually adjusting your price, your profits, okay, as the trade progresses. So let's assume you set your trailing stop at 20 pips. What it means is that whenever your trade resumes, and as soon as it moves 20 pips into profit, the trailing stop will be trailing your profits with that 20 pips. So if the trade moved 30 pips in profit, the trailing stop would have secured 10 pips. What that means is that if the trade reverses, it will hit you out with the 10 pips. So you already kept 10 pips as your profit. And the trade moves, and it moves gradually without pulling back, and it moves up to like 70 pips. By the time the trade is in 70 pips, because your trailing stop is 20 pips, you have already secured 50 pips. Okay? So that is how trailing stop work. Now, trailing stop is to secure your profit in a moving trade. Okay? You want to be securing your profit so that in the event that price return, there is a level you have kept and the market will take you out at that level. Okay, how it works. A trailing stop follows the market price at a set distance, e.g. 20 pips. If the market moves in your favor, the stop loss adjusts upward in a buy trade and downward in a sell trade. If the market reverses by the set amount, the trade is closed automatically, locking in the profit. Okay, so now, the simple English is that your trailing stop, it is your stop loss that is being moved. You know, when you enter a trade, your stop loss is below or above your entry, depending on whether you are buying or selling. Okay? But with your trailing stop, the stop loss will now move into profit. So at that time, it's no longer a stop loss, it's a stop profit. All right, but we call it trailing stop. Some people still call it stop profit because it's already in profit. Okay, they still call it stop profit. There are some educators you see, they keep mentioning stop profit for trailing stop. Okay, so it's as simple as that to understand. Okay, so I have done the analogy already, but let's see what this point is saying. It says, example, buy trade. Entry Euro USD at 1.1000. Trailing stop 20 pips. If price move to 1.1050, the trailing stop loss move to 1.1030. This is exactly what I have explained earlier. If the price then falls back to 1.1030, the position is closed. So in this case, your position is closed, locking in your profit. Then in the case of stop loss, your position is closed with a loss, which is the minimal loss you want to, the maximum loss you want to secure for the that you want to let go for that particular trade. Okay? So benefits. What are the benefits? Locks in profit as the market moves in your favor. So trailing stop is sweet when your market is moving, booming, you know, and if the market moves rapidly, you know, and in some cases, there are some drops like gold this evening actually did something to me. I was on gold trade this evening, and that was around 3, between 3:30 and 4, and the market dropped rapidly, okay? But it has not hit my TP. And right in front of me, the trade started going back, but ordinarily I counted it as just a minor pullback. But at the end of the day, a trade that has given me $157, okay, two positions that are given $157, went back into 300 and something dollar negative. So you see, if a trailing stop was on that trade, it would have just closed the trade at a particular profit. Okay, the trade is still running as we speak. The trade is back from that initial negative now. The trade is back to like less than $20 negative, okay? Now, there's what we call floating profit and loss. Floating profit and loss. Now, you have not lose, a trade is not loss, is not counted as a loss until the trade is closed. In the same vein, profit is not counted as your profit until that trade is closed. So you see, maybe as at when that trade did 158 plus, it was profit, right? But it's not my money yet because the trade was not closed. And the thing went back into negative. Now it has come back very close to entry, but not up to entry yet. The last time I saw it, you know. So what happened in that case is that both the initial profit and the loss it went back to, it is called floating profit and loss. Floating profit and loss, okay? As time goes on, you begin to learn all of these terms. Gradually, you're beginning to pick them. Okay, so limit losses automatically requires no manual adjustments. Okay, now, just like I said, I also mentioned that you can do it manually, okay? But doing it manually is that you are working with the trend of the market and you understand the market structure. If you understand the market structure and you have entered the trade and you see that the trade has moved into profit and has crossed a particular structure. Maybe it's in an uptrend. The trend moved from one higher high to another higher high, returning to the lower high, higher low rather, okay? And pin and went again to now overtake the previous high. That's when you can now begin to move to the next level gradually like that. Okay, so what we just need to do now before we go into trends, okay, we're going to trend and support and resistance. But before we go into that, I would want us to take a trade, okay, and we set all of what we have mentioned. So let me log in on my phone. Let me log in on my phone.
Recording in progress.
All right, so I've disconnected audio on this one so that there'll be no interference. So let me share my screen. I want to demonstrate like what we have just talked about here. Okay, start now. Okay, so I've started sharing my screen. Is this shared? Oh, my network is bad. My network is bad on this other side. Let me try to change network. Okay. All right, I've changed network here now. So trying to log in again. All right, so let me share my screen now. Share screen. So we'll be using demo. Okay, is my screen shared now? Okay, I think it's shared. Okay, so if I ask any question, you can just be using the chat box or any of the emojis, you know, to just respond. It gives me an idea that number one, you can hear me. Then number two, I get a reply and response on what I am asking. Okay. All right, so I'm going to log into my demo account. Okay, but we need, okay, I think okay, I'm on this trade, so let me see. Okay. So doing a trailing stop on this account right now. Wow, this guy has pulled back this bad. Okay, so now let me use this trade for instance. This one now, this is vol 99, because this trade has actually pulled back badly. This trade, the last time I saw it, it was so vol 99, this is daily, and we are buying. Okay, so this trade, I didn't set take profit, stop loss. I didn't set anything. That's what it means. Oh, you know, sometimes, you know, these are trades we entered during a live session. Okay, I closed the previous one because this trade was since yesterday, this particular one, but we repeated today, and I said those who are still on the trade may remain on the trade, but if you have closed, you want to re-enter, you can re-enter. So the previous one was closed, and I have to just re-enter this trade, but I didn't put take profits and stop loss. So that's why the last time I saw the trade, it was around, I think, 33, a bit $34, you know, but right now it has pulled back. And what I'm seeing here now is $27 on that particular trade. So what you need to do on trailing stop now, I'm coming here because we want to do trailing stop, right? Now, trailing stop is simply moving your stop loss, okay? Now, if you ask me this trade is actually changing direction right now, okay? Because it has broken a trend, okay? Now we're coming to trend, it has broken a trend. What is remaining for it to do now is to break this level, this support level, and the trades will start selling. Okay, it will start selling. So what do I want to do now? I want to put my stop loss into here. So I want to put my stop loss just below here. So what that means is that I have moved my stop loss into profit. So this is called trailing stop. This one is called trailing stop. So now if you see, let me remove this other black line, maybe it will not allow you to see it very well. So this stop loss now is going to secure this trade $25.44. So if this trade now come down from where it is now, it's going to secure this as my profit. All right, so this is what is called trailing stop. Now, what I have done now, I did it manually. But if you were to set this, you set it with a number of pips, okay, or points, as the case may be. And what happened is that as the trade continued to progress, the stop loss will be following the trade. Okay, the stop loss will be following the trade. As the trade is moving, the stop loss is following it until it will reverse. Like in this case now, this trade is reversing and is going to take me out. Okay, now it has done the first one. The first work it did was to change the trend. Okay, now this trend has changed. Then after breaking the trend, it now went to do what we call, it now went to do what we call a retest. Okay, so this line that I put here now, this line is what I referred to as a trend. Okay, so now this was the break of the trend. This movement that came down like this, that was how the trend was broken. Okay, now that this trend is broken, it now went back to retest that level. Okay, there's what we call break and retest. So it has broken the trend line and it went to retest. So having retested is now coming back down. So now this trade is already ripe for entry. But for me, what will I wait for to enter this trade? Now, let me show you what I'm going to wait for. Now, I'm going to wait for that line I dropped earlier, which is a support. So this is the next support in this case. So I'm going to wait for the market to break this support. As soon as this market breaks this support, which means it's ready to go down now. The market is ready to go down. Then you can see that it touched it and it bounced back. Now, don't be surprised. This trade may just touch this level and continue a movement back up. So if we continue the movement back up, which means what has just happened here is a pullback, a minor pullback. And for you to know that it returned and the trend continued, the market continued, it has to break above this level. So by the time it breaks above this level and continue, the market has continued to move up. Okay, so what we actually came here to do is trailing stop, to show you how trailing stop work. Trailing stop is simple, just moving your stop loss into profits. If that's the only way you understand it, it will help you. Your trailing stop is moving your stop loss into profit so that if the trade reverses, it takes you out in profit instead of taking you back to negative and you go out in a loss. Okay, so all my trades are pulling back. All of them are pulling back. This $70 was at a time $111 on this account. So let me check this guy. Can you see the speed? This guy is pulling back now. I think for this reason, let me just close all these trades. Let me close all of them. There is a way to close bulk closing, right? So let me close everything and we say close all positions. I'll use this and all of these trades have closed. So all of these are practicals we'll be doing from Monday. we'll be doing all of this practical. I think today, tomorrow, we'll finish everything we need to do. Then from Monday, we'll be doing practical, all right? Monday, I will introduce a strategy. We'll set up that strategy in our phone, the same way I have it here now. What I have here is a strategy, okay? What I have here now is a strategy. You know, we'll set the strategy on your phone. I will show you how it works, what you need to look out for a buy, what you need to look out for a sell. So we'll be doing all of this as practical, you know, when we start to do the practical next week. Okay. So now why did I close all these trades? Because number one, the market is gone for today. Then number two, I don't just want to monitor anything to begin to check proper level and all of that. Okay. So I missed the class. Now, no current in my phone. No current. Okay. So these are the trades closed on this account for today. All right. So this is history. These are the trades closed on this account for today. You can also see this negative that were closed. This one hit stop loss. This one hit stop loss earlier. This vol 80 and vol 40. They hit stop loss. Vol 80 has 2 positions. Vol 40 has 2 positions. They hit stop loss earlier. And this stop loss took how many dollar? Think about, okay, this is 20, 20, 20, about 80, almost $80. That was what only this guy took. So if this $80 was not taken out of the trade now, the total profit would have been maybe ranging $80 plus this. That would be around maybe 140 something, $150. But in the just like you see, there are profits, there are losses. But at the end of the day, at the end of the month, let your profit be greater than your losses. That is when you become profitable. Okay, so let me log out of this account now. I'm going to go into a demo account. I'm going to go into a demo account so that we can do some practicals on this, what we have. Okay, so can you see this now? We actually, these 2 trades, we entered them on, was it on Monday or Tuesday, that we were looking at to set, what was it we set? These 2 trades, we took them on Monday. And I said flip 1 was selling, and we took instant, yes, when we're doing instant execution and a limit order, that was when we took this trade. So I did a buy limit on vol 20, and we did instant execution on flip 1. Okay, so I put take profit and stop loss on this guy that day, but this limit order, I did not put anything, so there are no parameters. So why did we come here? We came here because I want to show you how to set your take profit and your stop loss, all right? And I have shown you break even. Now, I didn't know that I was going to even see a running trade here. If not, I wouldn't have shown you that account. I would have logged into this demo directly and come and use this one for the trailing stop. Okay, so now we are going to take a trade now. We're going to take a trade now. So these are our assets. Now, when you look at the bottom of this your screen, okay, so you see this one, quotes. The first one is quotes. That's where we are now. The next one is chart. Chart is, okay, chart is chart. I'll show you. Then this is trade. Trade is the trading window where we were, where you saw the trade moving, that one is in profit, one is in loss. Then this is history. This one is history. History will give you history of trade that have closed. Okay, so you can check daily, weekly, monthly, yearly, 3 months, and you can also do custom search. So let's assume you want to go back to maybe the last 3 months or the last two weeks or 3 days. You just use the date to search custom search. So you say you want to see your history between Monday, which was 19th, to today. So you put in that custom search and it will give you that. So let me now go to the quotes, because I brought you here so these are your quotes. These are your quotes. Okay, so now if you have set up your account, the video I did showed you how to add your, but when you set up this account, you only see vol, FS vol, and XFX vol. Okay, but me, I don't trade XFX. I only trade FX vol, flips. Then this pen and gain, I look at them occasionally. I don't trade them ordinarily, but because I'm serving a community and there are so many people who are in love with them, I also look them occasionally. Okay, so these are your quotes. Now you want to add to your quotes. Maybe let's assume you just came and you just set up this account. For you to add to the quotes, you see this plus sign here. To add to your quotes, you click on the plus sign, all right, and it will take you to, so let me click on it now. I've clicked on it. Now it has brought me to symbol. So it says search, but I'm not searching because what I'm looking for is inside here already, synthetic. Just click on synthetic. So you see everything here now. The ones that are marked good, those ones are the ones showing on my quote list where I have my quotes. But now let's come to XFX. Okay, XFX are marked, so which means SFX are also there, but I don't need them. So let me remove them. Okay, let me remove them. Let me remove them. So this is how to remove. Then the good is the ones you want to show. The other ones are the ones you don't want to show. So I've removed XFS. There's no way you see XFS here on my quotes again. Okay. So now you want to take a trade. You want to take a trade. So I was looking at VO 99. So let's see VO 99. And I said the trades need to pass a particular level to, okay, VO 99. Where's 99? FS VO 99. Okay, so can you see that the thing has broken the, it has broken the level now? Can you see how the trade is running now? So let's take this trade. Now, there are different ways to take trade. I've shown you how many the other day. So now this is another place. Now this is buy and sell. But this one is very dangerous if you leave it open. So you saw that it was closed. Okay, but because I want to use it now, I tap it and it will open. So let's sell. I have sold. Okay, I have sold. Now, if I look at this market, with the structure this market has, if I want to set my TP, I will set my TP at this level. This level here now, this level 48457.89. This is where I will set my TP. Then my stop loss will be above here, which is the last swing high. Okay, so now let me set, now you can actually set your stop loss with this is, you need to really come advanced to a level before you begin to use this. So you can just click here and you put it here. All right, I'll put it here. Then I click on the XL and I move it to where I want it to stay. So this is my profits and my take profit and my stop loss. Then you see this blue arrow. I'll click on the blue arrow and it will bring me here to modify. So this is in the same vein. If you now want to set your take profit, you can also use the window, the trading window. You press hold and you click on modify position. When you click on modify position, you come and type the figures here. So let's assume you already have the figure, you type them here. But because I did this manually with my hand, I did it on the way the system, the way that place is automated, somehow made it easy. It's just to move the line and you keep it where you want to keep it. So now I come here and I say modify. So I'm clicking on the modify now at the bottom. Look at the bottom of the screen. You see modify. So I have done this. So this trade now has take profit and stop loss. Can you see? So this is the take profit. This is the take profit. Let me move it in such a way that, so this is the take profit now. If I click on the line now, you see how much the take profit is going to give me if this trade hits take profit. So it's going to give me $18.35. Then if it hits stop loss, it's going to take away $10.43 from my account. All right, from this account. So let's look at the trade now. The trade is running, it's still at entry. All right, it has not really moved significantly, but we're going to leave this trade here. We're still going to look at it because this demo is what we'll be using all through. And we're going to see this particular trade, whether it hits take profit or it hits stop loss. When we come back, we'll just go to history and look for it. Okay, so that is how to set take profits and stop loss. So now let me press hold again. Now, if I press hold on this trade, you have seen it now. So you want to put your take profit and stop loss. I'm telling you different ways you can do this, okay? Like when I showed you how to buy, sell, and to put a pending order the other day, I use the plus button on top of this screen now, as you can see. I use the plus button to enter. Okay, so you can use the plus button to enter from here. You can also enter from the quotes, but you need to begin to learn each of them to know how to. So now you click on modify. So let's assume I have not put anything here, but I have the figures. So decide where you have the blue line, that is the green line, that is take profit. That's where your take profit will always be. Then decide you have the red line, that's where your stop loss will always be. And please note, if you put wrong figure, it will not highlight for you to modify. Now, if you look at the bottom of the screen, it's showing that modify, but the modify is not highlighted. Reason being that I have not touched what is here. Okay, I didn't touch anything. So let me touch something now. So let me just change this 93 to 90. I've changed the 93 to 90. Can you see now that the modify button is highlighted now? So I can now click on modify. So this trade has been modified right now. So that's how to put your take profits and your stop loss. Now, something I didn't mention when I took that trade is the lot size. Okay, I already told you about the lot size the other day, but the lot size is what you should always be concerned about, looking at your account size, and with that you want to know the right lot to use. So the lot I use on this one is the minimum lot, which is 0.01. Okay, so if I had used 0.1, you see that profit, see this profit that is showing you that the profit is $18. If I had used 0.1, this profit would be $180. That is if I have used 0.1. This profit would have been $180, while the stop loss would have been $100. So you see how this lot size works. So the bigger the lot size, the bigger the profit or loss that will be realized. Okay? So let's come back here. So the trade is moving now gradually. It's moving, and the market does not just move in a straight line. Okay? It may be moving slow, but it's heading to a destination. So you can see this movement around here now. Can you see this movement? You can see how it's going up and down, up and down, up and down. But at the end of the day, the ultimate direction of this trade is it was actually going up. This trade was going up, and it continued up to this level before it started coming down now. So every market has its direction, but that does not mean that it will just start the vehicle and begin to move straight like you are driving a car. No, it will go up, down, up, down, up, down. It will deceive you. If you don't know what you are doing, you'll be running in and out of the trades. But if you know what you are doing, all those up and down movements will not move you. Up and down movement will not move you. You just leave it to do what it wants to do. And at the end of the day, it's either it will hit your TP or it will hit your stop loss. Or you come to see your trade to see that it is in good profit and it has moved to a level, it has broken some support or resistance. You want to move your stop loss into profit by trailing your profits. Okay, so that is what brought me here. No, so now I'm going to stop share. Let me stop share. So it's 9:01. Okay, 9:01. So we still have small time to look at trend, support, and resistance. Okay, so we'll be looking at trend, support, and resistance. Please, I've always said when we start this class, always make sure you write your questions, okay? Write your questions down so that you won't miss the question when it's time for question, because if you do not write it down, you forget what you wanted to ask. But if you write it down, you would have been able to remember as soon as you look at it that, okay, this is a question I have to ask. So if you have any question, write it down. If it is a type you want to write on the chat box, why not? You can still write it on the chat box. At the end of the day, we'll see it and we'll attend to it. Come and explain the trailing stop. I should come from where to where? Okay, now don't worry. That one will be after when it's time for question and answer. So let me share my screen again. Let me share my screen again. But before that, let me just check. All right, so let me share my screen. All right, so let's look at trends. Okay, so in the market, all right, we actually have in the Forex market, the market has a structure, all right? The market has a structure and it moves in 3 different ways, okay? So it's either the market is trending up or it's trending down. If it's not trending up, it's not trending down, then it's doing what we call consolidation. So that consolidation is a phase, trending up is a phase, trending down is a phase. So if the market is consolidating, so which means it will remain at a spot, okay? Both the highs and the lows, they'll be equal at a particular area, okay? The highs and the lows will be equal at a particular area. So the market will just cage itself in a particular area. But if it's trending, the market will be moving, building higher highs and higher lows, okay? If it's trending up, it will be building higher highs and higher lows. But if the market is coming down, it will be building higher low and lower high, okay? We'll be building higher lows and lower highs. So let's look at what we have here. Okay, so in foreign exchange trading, a trend refers to the general direction in which a currency pair price is moving over a certain period of time. There are 3 types of trends. The uptrend said the price is generally increasing, forming higher highs and higher lows. In a downtrend, the price is generally decreasing, forming lower highs and lower lows. Yeah, lower highs and lower lows, okay? Then we have the sideways and ranging bound trend. So that's the consolidation. The consolidation is sideways or ranging. Okay, you can call it sideways or the market is ranging. Okay, so that way the market is not really moving. It's not telling you that it's going up or it's coming down, but you know, you are just at a spot. And sometimes consolidation can take days. In some cases, if you are looking at higher time frame and you see consolidation, say probably let's look at daily. Now, if you see consolidation on daily, that may take like a month, it's still consolidating. Maybe 2 weeks, a week, it's still consolidating. If you see consolidation on 5 minutes, you know, that 5 minutes may not, maybe highest 4, 5, highest 1, 2 hours, you know, that ranging is over. So the higher the time frame, the longer the time of that consolidation. Now, in that consolidation on a higher time frame, there can actually be movement that you see in a lower time frame that you will not call a consolidation. So let's now look at the image we have here. Okay, so this is the market. This is how the market moves. Now, what this image has done is showing you the movement. All right, now it does not look smooth like this. I'm going to share my chart and show you. It does not look smooth like this when you go to the chart. All right, but there are higher highs and higher lows, and there are lower highs and lower low. But you will not see it as smooth as you are seeing here now. But that is how it is. Okay, so now this is another image. What is this image saying? Now, this image is showing you a level of small consolidation. So look at the markets. Now, the market was trending down, creating lower lows, lower highs, lower low, lower highs, and it now came here to create a lower low, create another lower high. All right. Now, here it did not create a lower low. Instead, it created equal low. So when it begins to create equal highs and equal lows, know that a ranging has started. But it depends on how long this range can be. In some cases, it may take, depending on the time frame, may take another 5 minutes, may take like 2 hours. You are still in a range. Maybe 30 minutes, you are still in a range. All right. Then 4 hours can take days. All right. Why 1 hour can also go into maybe almost a day or so. So here now we had equal low. Then by the time we move up again, we now have equal highs. Okay. Now, what this trend is showing now, what this market is showing now, is showing you a reversal. All right, a reversal, which is a change of character. So this market was trending down. The market was trending down, and it got to this level. It did some level of consolidation. All right, and it broke above the previous highs now. So this red line is the previous high. Okay, so it broke above. See how it broke above the previous high. You see this one? This was how it broke above. I don't know if you are seeing my cursor. This is the cursor here. Okay, it broke above it. So I don't know, this cursor, is it really showing? It's not showing. You're not seeing it very well. It's not showing. Okay, I've just seen that it's not showing because I'm still on my mobile. I just say, let me check it on my mobile. So this cursor is, okay, it's showing. The cursor is showing. It's showing. Yes, it's showing. Okay, it's showing. Yeah, I just saw it now. It's showing. Okay, so this red line here is the equal high, and this is broken. So this breaking this side, that is a change of trend. Now, after a break, you always want to look for a retest. A retest is the market will come back to that level before it will push up. Now, it can also come back to the level and break back inside. So which means the market is not ready yet. Okay? So all of these are practiced. By the time you know all of these things, when you are entering a trade, you are entering it with ease. Just like what I show you now. Do you know that what you are seeing here now was what I just showed you when I was looking at that VO 99? Okay, now that VO 99, when I was looking at that VO 99, there was a trend up. Okay, a trend was like this, but in the upside. So let's use like this now. In the case of the downside, it was like this. So I drew my trend line like this. So first was for the market to break the trend, and it came back again to do a retest. Then it was when I opened that this thing, I draw that horizontal line to say if the market break below this level, then we are going to go down. which was what happened, and I took that trade when we came to the demo. Okay, so all of this is now where the game becomes sweet, because you are coming into the real thing. Now, these are the practical. This is what you need to know. This is the foundation. So all of these higher highs, higher lows, we're going to see them practically on the chart, but that will be tomorrow. Okay, so still on trend. Okay, so now change of market trend, which is what I have. Good, good. So this one now is going to show you exactly what I did on that one. Okay, so now this one, can you see this line that went up now? So this was a trend. The market was trending up. Now, can you see when I said in the chart, it will not be as smooth as it is on those initial one you see that we draw line up, down, up, down. Can you see how it is on the chart now? See the low here. See the low, see the higher high, see the higher low. See the movement. It's not smooth. Then you need to have that eye to be able to identify it. So now this was a trend. The market was trending up, and it came back and broke this trend line. It broke the trend line and it closed below. Then it went back up to do a retest. So you see this place now that you have this box, this small box now, take that to be the line that I drew. Take it to be the line that I drew for you. And I said, that horizontal line, I said, if you broke below it, we are going to go down. So look at what happened. The market broke below, and what happened on this image now? The market went down. The market broke below and the market went down. Can you see how far the market? So all of these things, if you pay attention and you are able to do this, it will be as simple as ABC for you. It's not a one-day job though. It's not a one-day job, but gradually as you begin to do, especially when you are doing it with the chart, you're playing with the chart every now and then, you are not sleeping, you are playing with the chart. Definitely, over time, you become to see yourself, wow, I'm getting better by the day. You will know, you won't be told, you will know. The market doesn't move straight. Why is there? If the market doesn't move straight, why is there a sideways trend? Even the sideways is not straight now. Okay, don't worry. No problem. When we'll get to question and answer, we'll look at all of these ones again. Okay, so this is showing you how this this works. Okay. Now, what time, how many minutes do we have? 14, so we can still do something. Now, support and resistance. Support and resistance. Now, this trend and this support and resistance we are going to talk about now, we'll go into the chart tomorrow when we come for a start. Okay? We'll go into the chart tomorrow, then we'll start with the chart tomorrow, showing you support and resistance, how to draw them. Now, let's go back to that VO 99 again. You see that horizontal line that I drew is actually a support and resistance line. Now, when I drew it, it was a support. When I drew it, it was still a support. But as soon as the market broke below it, it became a resistance. Okay? So support is also a resistance, but it depends on where the current market price is. If the price is above such level, it is called support. If price is below such level, it is called resistance. Okay, so let's look at what we have in definition here. So in Forex, support and resistance are key concepts used in technical analysis to identify price level where a currency pair tends to reverse or pause. Support, definition. A price level where a downtrend is expected to pause due to a concentration of demand. Why it happens? As prices fall to a support level, buyers are more likely to enter the market, creating a floor. For example, If Euro USD falls to 1.0800 several times, but doesn't go below it, 1.0800 is considered a support level. Now let's go to resistance. Resistance definition: a price level where an uptrend is expected to pause due to a concentration of selling interests. Why it happens? As prices rise to the resistance level, sellers are more likely to take profits or short, creating a ceiling. So this time it was GBP USD that was used. If GBP USD rises to 1.3000 and repeatedly fails to go higher, it becomes a resistance level. So now let me break it down for you. Let me break support for you. Now, see yourself in a story building. See yourself in a story building where you are upstairs. Now, when you are upstairs, you're on the first floor. The floor you are marching on is a support. The floor you are marching on is called support. All right? The floor you are marching on is called support. Then when you look up, what you see is ceiling. Is it not so? Now, that ceiling, it won't be easy for you to go across the ceiling, even if you want to go up to the next level. You have some struggle around that ceiling. Is it not true? So that is why the ceiling is called resistance. So resistance is more like a ceiling. And for you to break that ceiling, you need to hammer it hard for a while, gradually before it will break through. This, in the same vein, that is how your support is. Now, I said you're on the floor, and the worst aspect is that you're on top of a story building, so the floor is concrete, right? The floor is concrete. Now, for you to break below this floor, there has to be some serious work on the floor for it to break below. So now look at what happened. For you to break below this floor, you need hammer, sledgehammer, and or some other heavy tools to begin to hammer it, to crack it until it breaks. Now, price also does that. So price, if price come into a particular level often for too long, so let's assume if the price came to that level today, yesterday it went to the level and bounced up, tomorrow it came to the level and is bouncing up. By the third day, all of those touches has been touching it and bouncing up. Now, what the thing is doing is that it has been, trying to weaken that floor. So when the floor becomes weak, price cannot break through. So that ceiling you are standing on, yes, it was difficult for you to go down, but now, because there has been some forces applied to breaking it, it has finally broken, and you can now pass through the hole that is broken and go down. That is how support and resistance is. The reverse is the case for the resistance, which is the ceiling. You need to apply enough force on the ceiling for it to break and you pass. Now, so what are the forces that you're applying? The forces you're applying is the multiple touches that price has returned to that place over and over again. So as price continues to return to that place, over time, that level will become weak and it will break it easily. So thank you very much. That brings us to the end of today's class. Tomorrow, we'll start with the practicals on this support and resistance. We'll go to the live chat. We'll draw it together, show you how it's done, then before we'll now go to types of analysis. So let me stop recording here so that I can open the room for questions and answers. Okay, okay, I stopped share, not recording. Okay, so let me stop recording. Okay. Let me stop recording. Okay, recording stop.